You started a business, you got to test the waters just a little bit. Now, should you take this to the next level and actually get incorporated? The corporation I'm going to be covering today is just the LLC. With an LLC, it gives you enough protection that you need to separate yourself from any entity or business that you own. So let's say you had $100,000 lawsuit that is coming down against your company, your LLC. This is how it would get broken down. Let's say you have a home, a car, and the business itself only is worth $1,000. You literally have $1,000 in the bank account for that business, right? In the business account for that company. Now you can only get sued for up to that $1,000. After that, you can't really take any more hits because that's all that the LLC has. So your home, your car, and any other personal assets that you have will not be affected whatsoever because the LLC is its own person, and what's getting sued is not you, is the LLC that you own. You may own it, but it is not you. So the only liability goes then to the LLC. The beautiful thing about an LLC is you can set up how you get taxed. You could do the S Corp or a C Corp. Really, those two are for companies that are much more advanced, that are bringing a lot of revenue and can really benefit from the tax advantages of setting these things up. You can definitely talk to an accountant about that. However, if you're just starting off, I will definitely suggest you do the sole proprietorships because it is simpler. It is almost as if you're filing your own personal taxes, and you can even do it combined easier too with the accountant. With the sole proprietorship, everything is passed through. So meaning if your business made 30 grand and you made 90 grand, you can combine those two, and really that's how much you made for the year. That's the only disadvantage, is that no matter how much the LLC makes, it just automatically gets added onto your income. However, the other two, I believe, are set up a little different. So definitely talk to an accountant if you are interested in the other two. But if you're just getting started, just go with the sole proprietorship. Okay, so here's the beautiful thing about having an LLC for tax purposes. So you are working a regular job. Your personal wages for the year is $60,000. The company automatically takes out your taxes for you, so you do not have to worry about paying taxes. And that is if you're claiming 0 or 1. In fact, you should be getting a little bit money back from that $60,000. But let's say your company now made $10,000 for the year, right? You should be paying taxes on that extra $10,000. However, if you have losses, and let's say your losses were $30,000, as long as your losses is greater than the income, you pay no taxes. So if your losses is $30,000, actually you're going to be getting a lot more back. And here is how it goes. The IRS allows you for the first couple of years to claim losses from your entire total income because you're trying to get this business going, you're trying to operate it. So the way it works is the IRS looks at it as if you made $70,000 for the year in total, but you had $30,000 in losses. Therefore, you should only be paying taxes on the difference, which is $40,000. So the fact that you paid taxes already on $60,000 in your personal wages, and you were only supposed to pay taxes on $40,000, you're going to be getting a lot more money back. The taxes that you paid on that extra $20,000 from the 40 to the 60 difference, you shouldn't have paid those taxes. So that's how it works when having an LLC. You get these huge tax benefits, especially for the first couple of years when you're trying to get your business going. And here's the full breakdown of the math. Right, let's say at $60,000, you add the 30% tax bracket, you paid $18,000 in taxes. Minus your losses, you were only supposed to be taxed for the $40,000. And if you're making $40,000 a year, you're no longer in the 30% tax bracket. You're actually paying less percentage in taxes. And just for a number that we're throwing out there, let's say that number is 25%. Meaning out of that $40,000, you were only supposed to pay $10,000 in taxes, right? But instead of paying $10,000, you paid $18,000. this is the beautiful thing. You're actually going to get back that difference back from the IRS. So that's $8,000 back that you're going to get back. If you did not have an LLC and you were just pretty much working alone, you would not have those benefits. So there is advantages. If you're making money from your business and you're getting it going, these are some of the tax benefits that you will get. It gets a lot more complicated than this because there are different kinds of categories that you can't claim losses from, etc. And when you make a certain amount of income, you can no longer claim like rent, different things like that. However, please talk to an accountant if you have further questions about some of these details. The accountant will also let you understand when you're at risk of being audited, and also if you have surpassed your limits of amount of losses that you were supposed to claim, because the IRS don't let you do these claims of losses forever. And if you keep doing this after those couple of years, the IRS look at your business as a hobby rather than an actual professional business. And you don't want that because you're at risk of being audited and all these things, etc. So definitely speak to a tax professional about these things and discuss your financials with your business, your personals, before deciding whether this is a right approach for you. These numbers that I've used, they're not actually correct. This is just to get your feet wet so you can understand how the LLC work when it comes to a tax purpose. If you're doing the simple basic sole proprietorship tax structure, and also why it's important that you do it. If you know that you're paying, especially if you're paying a lot of taxes and you have this business idea, get it incorporated. Even if you don't make as much in the beginning, but you make a little bit of something, you can claim losses against your total income of both your income from the business as well as your personal income. Definitely speak to a tax professional about this, even if you have questions before you even started, so you see how you have to structure your company, your LLC, that will work best for you. Drop a comment if you can, subscribe if you like the content. I will have further content so I discuss whether it's different business and investment ideas. I'm always open to share. If you have any suggestions, any topic you'd like me to cover that I've experienced, I will definitely be more than willing to share. So please subscribe if you haven't done so. Drop a comment if you can. If you have any questions for me, feel free to ask, and I'll see you next time.